Pi Network is once again making headlines, and this time it's because of a major step toward mainstream adoption. The project has recently partnered with ONRAMP Money, giving people in more than 60 countries the ability to buy Pi directly using everyday services like ALIPAY, Maya, and GCash. For the millions of people in Pi's community, this feels like a big milestone. It's one of the first large-scale fiat gateways that truly makes Pi accessible to everyday users, not just crypto enthusiasts. But here's the twist. Despite this new level of accessibility, the price of Pi hasn't followed the kind of explosive trajectory that many holders were hoping for. Even with OnRamp Money opening the doors to so many buyers, Pi has continued to trade below 35 cents. Sellers are still dominating the market, and in fact, the coin has shed more than 80% of its value over the last 6 months. That kind of drop is brutal, and it raises a tough question. If accessibility and global reach aren't enough to push Pi higher, then what exactly will? The answer lies in how the Pi Network team is approaching growth. Instead of flooding the market with tokens and leaving prices to be driven by hype and speculation, Pi is taking a much slower and more deliberate path. The project is carefully releasing tokens through foundation wallets, and instead of making them available everywhere at once, they're choosing regulated partners like OnRamp, Banxa, and TransFi. These platforms are already connected to more than 170 payment methods worldwide, which means Pi isn't just about offering trading opportunities, it's about building a compliant ecosystem. Some analysts, like Dr. Altcoin, describe this strategy as an intentional funnel. The idea is to direct Pi tokens toward real-world usage, into apps, into commerce, and into peer-to-peer transactions rather than letting speculators pump and dump the coin. If you think about it, this is very different from the way many other crypto projects launch. Typically, a token hits a few big exchanges, hype builds around it, traders rush in, and prices spike. But just as quickly, the hype fades, early movers cash out, and the community is left with a coin that has little to no utility. Pi seems to be deliberately trying to avoid that trap. And this careful approach is catching the attention of some pretty serious players. In Europe, for example, we've already seen the launch of a Pi-based exchange-traded product, or ETP. For those who may not be familiar, an ETP is a type of investment product that makes it easier for institutions and traditional investors to gain exposure to an asset without directly holding it. The fact that Pi has already been packaged into a product like this suggests that certain parts of the traditional finance world are warming up to it. And why? Because the project is leaning into regulation and compliance rather than running from it. Supporters of Pi argue that this foundation, the regulated gateways, the cooperation with financial institutions, and the push for real-world integration makes it different from projects that rely purely on hype and speculative trading. They believe these building blocks are going to be the key to Pi's long-term survival. In other words, even if the price isn't soaring right now, the groundwork is being laid for something that could potentially last. But the big challenge Pi faces right now is momentum. In the short term, the numbers just aren't moving in its favor. Over the past 24 hours, Pi dropped by 4.5%, sliding back down to about 34 cents and failing to stay above that 35-cent line. Every time there seems to be a little bit of recovery, buying pressure fades and sellers step back in to push the price lower. For traders, this can be incredibly frustrating, because announcements like the OnRamp integration normally create at least a temporary price boost. But in Pi's case, the excitement fizzles out quickly. This is where the Pi core team's message becomes really important. From their perspective, the current price action isn't the main story. What matters most to them is getting Pi integrated into real-world systems before expecting any kind of sustainable price appreciation. They're essentially asking the community to zoom out, to look at the long-term picture instead of the day-to-day fluctuations. The team believes that when Pi starts being used for things like shopping, app development, or international remittances, that's when true demand will begin to grow, and with it, the price. Of course, the unanswered question is whether investors and early adopters are willing to wait that long. In the fast-moving world of crypto, patience can be hard to come by. Traders are used to quick wins, big pumps, and short-lived rallies. Pi is almost taking the opposite approach, focusing on building a regulated, compliant, and usable ecosystem first, and leaving the price to catch up later. If this strategy works, Pi could end up being one of the more resilient projects in the market. It wouldn't just be another coin that rode the wave of hype only to disappear once the market cooled off. Instead, it could become a currency that has actual adoption and usage at its core. On the other hand, if the community loses faith before that adoption materializes, the slow approach could backfire, leaving Pi stuck in limbo. So right now, Pi is in an interesting place. On one side, you've got the optimism, easier access through platforms like ONRAMP money, recognition from financial products in Europe, and partnerships that support over 170 payment methods worldwide. On the other side, you've got the hard reality of the charts. A token that has lost more than 80% of its value in half a year and can't seem to hold steady even on good news. The truth is, both sides of this story matter. Pi is laying important foundations, and those foundations may well pay off in the future. But for anyone holding the token today, the short-term ride is rough. The community will need to decide whether they're here for the quick gains or whether they believe in the long-term vision that Pi's core team is building. And that's what makes this moment such a crossroads. Pi Network isn't dead by any means, in fact, it's growing its reach more than ever. But whether that growth will eventually translate into real momentum on the charts is still an open question. For now, Pi is betting that slow and steady wins the race, even if traders are itching for something more explosive.